You ready? Yeah, you got me running, you got me running, got me running. Shake it, shake it, shake it, shake that. Raise your hands up, raise them out.
All right, hello everyone, and welcome to today's currency call presented by Forex Trading Asia. It is Tuesday, the 8th of February already, 2022. I hope everyone had a good session if you were trading yesterday as well, and that you are having a nice day so far today. We do have the Euro in focus because it is Tuesday, and we've got Jin back as well. But just before we get into everything, as well as the breakdown of the ECB meeting last week on Thursday with Kim Hong here, I'll just go into the risk disclaimer because we are sharing trade ideas as well today, and it is just important to understand that there is risk involved with that as well. So I'll just bring up the risk disclaimer now, just so everyone is aware of the risks associated and they clearly understand that we are just offering trade ideas as well. So I'll make this full screen, and any information shared in this video is not intended to be a trade recommendation. It is solely the opinion and views of the speakers. So please remember to do your own analysis prior to entering any trades. And again, feel free to ask questions during the call if you are a member of the LCMS Traders Club watching it live, or via the Ecofin platform as well if you'd like some more clarity. But just before we get into the Euro, USD and the Euro Pound with Jin, we've got Kim Hong here, currency strategist at LCMS Traders, to discuss the ECB meeting last week. So over to you now, Gimme.
All right, thank you, Scott. Okay, ECB meeting. It's probably more, I would say, constructive, okay, than the BOE meeting that was held last Thursday. Okay, remember that there were two central bank meetings, okay, in the evening, GMT +8 last Thursday, and wow, not sure how many of you actually joined our Thursday call. Okay, it was quite, I would say it was quite a good prep for the members, okay, our Traders Club members, all right. So ECB wasn't really expecting anything, okay, but wow, there's always surprise, okay? So what they held, okay, well, what they did was they held monetary policy unchanged, okay? Interest rate remains unchanged. QE remains unchanged as well, okay? So we know that the PPP, which is the Pandemic Emergency Purchase Program, will be ending, okay, in March, all right? So bond buying under the PPP will stop in March, and after that, they will, it will actually enter the reinvestment phase. Well, the central bank has already extended the reinvestment phase for the PPP as well as the APP since, last meeting, okay? It was last year, back in last year. So nothing has changed, okay, in terms of monetary policy. Pretty much expected, okay? But the thing is, all right, during the press conference, okay, Christine Lagarde, okay, I have several things to quote over here. Let me just see if, okay, you know what, right now what you're seeing is the interest rate statement, okay? I'll just briefly go through the main points that they have been copying and pasting since meetings ago, all right? So let me see over here. Okay, PPP over here, okay, will be conducted at a lower pace than in the previous quarter. Okay, that means in this current quarter, 2022 quarter one, bond buying will be carried out at a lower pace. It will discontinue, okay, at end of March 2022. All right, and then it will reinvest the principal payments from maturing securities purchased under PPP until at least end of 2024. Okay, and then what else do we have over here? PPP reinvestment can be adjusted flexibly across time, so on and so forth. Okay, and that's it for PPP. Okay, under the APP, as planned by the central bank during the previous meeting last year, once the PPP ends, okay, APP bonds buying under APP asset purchase program, okay, will be increased from the current 20 billion euros to 40 billion euros in the second quarter of 2022. Okay, so this is actually to avoid a knee-jerk reaction once the bond buying under PPP ends in end of 2022, end of March 2022. Okay, so that's the first quarter, and then second quarter onwards, APP will bond buying under APP will increase from 20 to 40, and then during the third quarter, okay, it will be toned down, okay, tapered, or what Christine Lagarde likes to call it, recalibrate, okay, to 30 billion euros a month, okay, for the third quarter. And then from fourth quarter onwards, okay, from October onwards, the central bank will maintain bond buying under APP at a monthly pace of 20, okay, will be further recalibrated down to the current pace of 20, okay. So this whole, I would say, this whole process is actually meant to facilitate, right? And then it will last for as long as necessary to reinforce the accommodative impact of the policy rates, okay. And the Governing Council expects net purchases to end shortly before it starts raising the key ECB interest rates, okay. After which, it will continue reinvesting in full for an extended period of time, okay. So APP's reinvestment phase will also be extended, okay, until as long as they deem necessary, okay. And then when it comes to interest rates, it has been held unchanged, respectively at 0.25 and then 8.5, okay. And then in terms of inflation, they are still targeting the symmetric 2% inflation, or they are still adopting this whole symmetric 2% inflation target that was adopted last year. I think probably mid last year or early last year, okay. And then when it comes to TLTRO, forget about it. At the moment, the central bank is not in the right, mood to actually talk about the whole TLTRO thing, right? So we can just leave it aside. It's going to be the same, and that's it for the interest rate statement, right? As usual, nothing new coming from the statement as we have seen from last year, okay? Hardly anything new, all right? So what's new, is that during the press conference, okay, I have a couple of quotes to make, okay? The first one is this, okay? As we all know, okay, most of the central banks, major central bankers, okay, back in 2021, they were actually expecting inflation to be transitory, to be temporary. It will actually come back down to their respective targets, okay? Eventually, probably in 2022, early 2022, and things like that, right? Because they believe that oil prices will just be high for a short period of time, supply disruption, will probably be over soon and things like that, okay? Hence, inflation is transitory. But, okay, Christine Lagarde, who's actually a strong, I would say, who's actually strongly towards this whole inflation being transitory, okay, has actually said this during the press conference last Thursday. I quote, "Inflation is likely to remain elevated for longer than previously expected, okay, but to decline in the course of this year," okay. So this line, this quote that I just made was something new, okay. That's the first thing, okay. And then the second quote that I'm about to make is this, all right. "Compared with our expectations in December, risks to the inflation outlook are tilted to the upside," okay, meaning, inflation is likely going to rise higher than previously expected in December, okay, particularly in the near term. If price pressures feed through into higher than expected wage rises, aka wage inflation, or the economy returns more quickly to full capacity, inflation could turn out to be higher. Okay, so you can see that from these two quotes. Okay, it's like a sudden, I wouldn't say a sudden, but from December to now, okay, there's actually a change in tone from the ECB, okay, specifically Christine Lagarde, the president of the central bank, that they are more concerned with rising inflation now than back in 2021, okay, since the last meeting. All right, so with all this increased concern of rising inflation, and after evaluating this whole situation, we feel that inflation risk is more tilted to the upside and things like that. Okay, the market is actually now starting to price in 2 rate hikes in 2022. All right, of course, whatever the market is expecting, that is of course the market's expectation. All right, the central bank will not carry out moves based on the market's expectation. Okay, so if you guys think that it's not strong enough, wait till you hear this. All right, one of the ECB member, okay, within the committee, okay, not KNOT, okay, I think his last name KNOT, not. I think in a speech yesterday or the day before, he actually mentioned that he's expecting the ECB to carry out 1 interest rate hike in 2022 this year. Okay, so he is expecting 1 rate hike. Okay, so back in 2021, we don't really see or hear, central bank, committee members from the ECB to actually say that they're expecting rate hikes, or rate hikes, door to rate hikes is now open, rate hikes discussion is now on the table, and so on and so forth. Okay, but right now we are hearing the first hint to a rate hike coming in from the ECB members. And I think it was yesterday, I actually posted a screenshot of that in the Ecofin platform, okay, our Traders Club, right? So will we be hearing more from the committee members? Well, we'll have to stay tuned and see how it goes. Okay, so with all this expectation from the central bank that inflation is tilted on the upside, and the market is expecting interest rates hike coming in, and we may actually be hearing more from the committee members in terms of their view on interest rates hikes. Okay, Christine Lagarde, okay, she still warned us that during the press conference, okay, that although, okay, inflation is rising and things like that, the ECB nonetheless will not be rushing into any move. Okay, so it's a bit of a, I would say, very cautious approach, right? So she has changed her view from inflation being transitory to right now we are starting to get a bit concerned with inflation, rising inflation in Europe. Okay, but then again, she tries to not to let the market have this very strong reaction, okay, on that, by saying that nonetheless ECB will not rush into any move. But okay, if you guys remember, for the previous few meetings, she has been emphasizing that interest rate hike in 2022 is very, very unlikely. Okay, we will not be carrying out any interest rate hikes. Okay, but this time around, during the February's meeting, she did not mention anything about it. Okay, she did not cover anything like interest rate hike this year is very unlikely and things like that. So I take that, okay, as a very, very, very subtle hint. Okay, tons of very with a subtle at the back. Okay, very, very subtle hint that Christine Lagarde is probably putting interest rate hike back on the table. Okay, but not telling us that upfront, like obviously and things like that. Otherwise, okay, because of this press conference, okay, if you guys were to look at the chart, Euro has already strengthened across the board last Thursday. Okay, there wasn't much movement during the release of the announcement at 2000 GMT plus 8, okay, but during the press conference at 2030 GMT plus 8, okay, Euro was just strengthening across the board, okay, and it was quite a sustained move, I would say, okay, because of this hawkish tone from the president herself. Okay, so overall, we get a very hawkish tone from the central bank. And another point I would like to bring out is this. Okay, she actually mentioned that during the March meeting, which is the next meeting, okay, there will be a new set of quarterly economic projections that will be released. Okay, and that set of economic projections, okay, be it GDP, employment status, or inflation, okay, that may likely put the ECB in a more, I would say, in a clearer perspective as to whether or not they should increase the pace of QE tapering, okay, or recalibration, okay, in terms of APP, all right, and may eventually lead to the first rate hike in 2022. Okay, I'm not trying to give you guys false hope over here that the ECB will be rising interest rates and things like that. Of course, it all depends, like what the central banker Lagarde has mentioned. Okay, it all really depends on the data. It all really depends on the recovery in Europe. It all depends on how inflation were to, progress in the next few months. Okay, if it's still like breaking new decades high levels and making strong economic recovery, then they may very well speed up the unwinding of bond purchases, right? And then remember, okay, APP will be toned down to 20 billion euros per month, okay, starting from October onwards. Okay, if they were to actually speed up, bond purchases, tapering of bond purchases like the Federal Reserve did in December, okay, doubling it, right? Then we may actually see the ending of bond purchases as early as October, okay, under APP, all right? And then if that were to take place, then, there's probably like 1 or 2 meetings to go before the end of 2022, right? So that actually leaves some room, although a small one, I would say, okay, leaves some room for the central bank to carry out a rate hike, okay? So nonetheless, market is now pricing in 2 rate hikes, okay? And we have already heard from one of the members that he's expecting 1 rate hike coming in from the ECB this year. Okay, so overall, I would say quite hawkish tone from the central bank. Okay, and let me see if one more thing is that yesterday, Christine Lagarde actually carried out a testimony. Okay, and there's actually a testimony. This is actually a testimony statement. All right, I will be sharing the link with you guys later. So nothing much from the president herself. Okay, let me see if there's any. Because whatever she mentioned over here is pretty much what she mentioned back in the press conference last Thursday. Okay, there is the part on ECB. Over here, in a few weeks, the March ECB staff projections will provide an updated assessment, taking the most data into account. Now, this will help the governing council better appraise the implications of the surprisingly high December and January inflation figures for the medium-term outlook. So, the set of data will, it will also inform the public of whether they're actually expecting inflation to rise further or not. Okay, so let me just go to the section on monetary policy. I think it's over here. Okay, so to sum up, the euro economy has continued to recover, although growth is expected to remain subdued in the first quarter. Okay, then in the meeting last week, we confirmed the decisions we took in December, okay, to reduce the pace of assets purchases step by step over the coming quarters. That's for APP, and then to end PEPP, bond purchases under PEPP at the end of March. Okay, so nothing new over here, but she did emphasize this. A rate hike will not occur before our net assets purchases finish. Okay, so like I've said, if everything goes on smoothly in terms of economic recovery, and if inflation were to carry on rising, then they may actually end off bond buy earlier than expected. That will actually give them more flexibility in terms of whether or not they should carry out a rate hike. It's just like the same scenario as how the Fed actually approached this whole monetary policy at the moment. Okay, so that's for the testimony. Okay, I mean, we already know she's sounding very hawkish. The ECB has been very hawkish and things like that. Okay, so any questions on the ECB's meeting last Thursday and things like that? Okay, so no questions for now. All right. So with that, I will hand it over to Scott for his analysis on the DXY. Back to you, Scott.
All right, thanks for that, Gimme. And remember, guys, the 8 p.m. GMT +8 call is this evening as well, instead of Monday. So just be mindful of that. So I'll get into the US dollar index now as well. And it was a pretty muted session in regards to what we saw. And I was talking about this yesterday with the fact that we've got a level up at around 96 flat. We're currently trading at just over 95.50. And we have had some dip buying down at 94.67 or thereabouts. And, we're right sort of in the middle of these two levels. Well, a little bit closer to the 96, but there's not a lot of catalysts out even for today. So I'll just bring up the calendar and just take note. The time zone is for GMT +8, which is Singapore time zone. So I'll just scroll through. We didn't actually have any news out yesterday. And the market overall in the US with regard to equities was pretty flat as well. And it's just an anticipation, it feels like, on the inflation numbers that are coming out. We've got some trade balance figures tonight, but again, not really a lot to talk about in regards to high impact news. And then for Wednesday, much the same, really. We do have FOMC member Bowen speaking as something to sort of take note of at 11:30, but not really a lot there to sort of see markets move on news. And so 9:30 on Thursday night, we do have the CPI month on month and the core CPI and unemployment claims too. Unemployment claims not as important, but definitely that's going to be a big driving factor. And we are seeing, the month on month figures a little bit weaker. So that is something that's going to be interesting if we do come in, especially if we come in lower or in line with, that could potentially see the US dollar hold this tight trading range between sort of 95 and 96 flat, that 100-point range or so. But if we see a beat, we could see the US dollar lift, where it's been really held down pretty stubbornly. So could create some opportunities either way, just depending on that release. But for now, I would say that the Euro pairs have been offering a little more opportunity. We did talk about the Aussie yesterday, but we do have the Euro USD, and we've got the Euro pound here with Jin. So what I'll do is pass it on to him. But again, guys, wait for the inflation data for getting some direction on the US dollar. So over to you now, Jin.
Thanks for that, Scotty, and thanks, Gimme, as well. So looking at the euro dollar today and the euro pound, Gimo has went through it in detail about what happened last week with the ECB, and looking at the analysis, looking at the commentaries coming from the ECB, it looks like what we might be seeing moving forward is possibly, as Gimo said, a very, very, very subtle hint of a rate increase coming from the ECB, moving from their previous stance of no rate increases. And also, like Scott was just sharing with you, the CPI for the US possibly not looking to go crazily out of control on a month-to-month basis at this point. So what that all means is, looking at the charts here for the euro dollar on the H4 time frame, I've actually just put that in before. What I would say is that this 1.14 support level seems to be that floor, seems to be quite a strong level at this point. I'm looking at a possible move downwards. I think it would test this support level one more time, but what you should be looking for is for that bounce off this support level, possibly at a buying opportunity of about 1.1420, 1.1419. Same thing as what happened here. Look for it to clear off that level before we can see that move towards the upside. So quite straightforward here. If it does break below 1.14, I would be a bit more cautious. I wouldn't be looking to sell it down too much, because we're not seeing a lot of US dollar strength at this point, and we're seeing some positivity coming around for the euro itself. So look for buying opportunities 1.1419 or 1.1420. We'd have a 30 pip stop loss slightly below that resistance, below that support level. Take profit at about a 60 pip. You're looking at a 1:2 risk reward ratio, back up towards that recent high point from back in the 14th of Jan. If this level does clear, then we could see very good upside potential towards that 1.167 level, because the last time it went there was a very long time ago, back in October 2021. So you can see that once it clears off this point, we can see quite a good move towards the upside. But I think the immediate trade idea or the immediate targets would be for it to test that support level, bounce back up, look for that buying opportunity towards that recent high point of 1.1480 for that 1:2 risk-reward ratio towards upside. With that said about the euro dollar, I forgot I was going to do a euro pound as well. So looking at the euro pound here, if we do see that euro dollar push towards the upside, I would not be looking for any trades on the euro pound for today. What I think you need to have is a bit more clarity on what could happen for the pound dollar, which we'll go through tomorrow. I think that with the euro pound pushing towards the upside, ideally we're looking for it to move higher, but I think with the pound dollar looking at some possible weakness on the pound dollar, we could see that push downwards, test that 84 level before bouncing back up again. So hold off on the euro pound for now. I would say look at it maybe tomorrow or later into the week for shorter term trades. I would rank the euro dollar a bit higher, pay a bit more attention to that rather than the euro pound at this point. So no trades on the euro pound for now. Look to the analysis on the pound dollar tomorrow, and then we might see it test that 84 level for possibly a buying opportunity back up again. So short and sharp with that, I'll pass it back to you, Scotty.
All right, thanks, Jin. And again, we do share the replays in the LCMS Traders Club. Make sure you get involved in the club as well. We're taking on new members. Thank you for joining us, to the members as well, and hope to see everyone in the call tonight. And bye for now.